What are corporate restructuring and turnaround? In today's rapidly evolving technological environment, the practice of corporate restructuring is emerging for eradicating any economic collapse and improving finance conditions. Corporate restructuring is an activity made by a corporation to alter its capital base or functions drastically. Generally, organizational change happens when a firm is having substantial challenges and is an economic burden. Restructuring is fundamentally a little competition. Effectively, restructuring decreases financial losses while also decreasing tensions among equities and bond owners, allowing a troubled condition to be resolved quickly. But first, if you're new here, consider subscribing to this channel to continue receiving great weekly videos on consulting. Don't forget to hit that notification bell so that you can get informed every time I publish a new video. Corporate restructuring. Corporate restructuring can be motivated by the need to alter a company's organizational structure or marketing strategy, or by a need to make economic corrections to its resources and obligations. A new paradigm could be used to split off such a subordinate firm, combine with some other firm, reduce or agent, etc. Turnaround. A turnaround occurs whenever a corporation that has undergone a phase of lousy performance transitions into a state of economic improvement. It can also focus on the economic comeback of a country and region following a time of financial or instability. Consequently, this can refer to either a person's rehabilitation once his or her economic status changes throughout the term. Turnarounds are notable since they represent an individual's upward motion or progress following a substantial period of adversity. The turnaround method is equivalent to a restructuring process in which the company changes from a time of failure into profitability and growth while stabilizing its density investment. The word can refer to the period that elapses between initiating and finishing a transition. The benefits of restructuring or turnaround. There are apparent advantages to restructuring a firm, such as several causes for a corporation to reorganize. A few financial rewards include rehabilitating a failing firm, boosting a corporation's worth, positioning this for transfer of property to another generation. Additional benefits include obtaining a competitive edge, such as assisting a corporation in setting itself for development, permitting new accounts arrival, allowing development in emerging geographic regions. Components of corporate constructing and turnaround. Assisting businesses. Their corporate reorganization and turnaround group assists businesses that are experiencing significant strategic and non-financial issues, such as rapid deterioration, performance trends, excessive leverage, cash worries, loss of identity generation or customers, and funding risks. They often deal with troubled businesses facing unexpected and extreme difficulties, disrupting free markets or other circumstances. Keeping a business's worth. Providing business, either functional or financially, can be an essential instrument in the standardized contract for an organization and its customers. There are numerous approaches for CEOs to sustain wealth in their firm, ranging from financing and budget enhancements to portfolio divestiture and liability control. Parts values are rising. One of the most common motivations for corporate restructuring is to split the company listed for sale. Shareholders will probably make reduced bids if a firm attempts to sell as a multinational. When a corporation is divided into multiple components, it can frequently obtain higher deals for all those particular pieces. It can raise the shareholders' wealth and make the company sell for a better price. Reduce one's spending. A further advantage of restructuring a corporation is that it lowers operating costs. For instance, a business could combine with another competing product and employ an economy of scale to operate more effectively. It may reduce the number of workers and devices to optimize business activities. In this approach, the firm may broaden its influence without significantly increasing its cost. If done correctly, the firm has the potential to bring substantial benefits to its stockholders. Disadvantages of corporate reorganization and turnaround. Restructuring costs. Even while reorganizing the company can decrease lengthy expenses, the restructuring process itself can be costly. Whenever a corporation reorganizes, it must pay legal costs and other restructure-related charges. If a firm combines with others, it must also raise funds to purchase the other firm. If the restructuring fails, it might harm the organization significantly and eventually lead to its collapse. Staff dissatisfaction. Whenever a firm undergoes a business restructuring, it can harm its employee involvement. Individuals resist failure, but being afraid of becoming downsized can negatively impact most of these movements, necessitating the departure of some employees. Customer loyalty may suffer as a result, and the organization may suffer in the longer term. Workers may become tense if they are unsure whether they will be among the unfortunate few who would let go. What is the difference between restructuring and turnaround? Turnarounds and restructuring are relatively new concepts and aim to save a corporation and keep it from going bankrupt. How a corporation turnaround functions. In its strategy, corporate turnaround is similar to organizational change. The very first step is to assess the circumstance. The professional turnaround expert determines the level of distress by doing a comprehensive examination of the entire organization and ranking the situations that require immediate care, those that need care but not instantly, and those who do not deserve intervention or are irrecoverable. These are usually accomplished by an expert turnaround specialist. Following the priority evaluation and identifying concerns by the directors, firm management and the turnaround expert will agree on a plan to target and rectify the difficulties. A corporate turnaround is much more functional, hands-on and team-oriented than corporate structuring. What is the process of corporate structuring? Review of the capital structure and balance sheet is the first step in corporate business restructuring. It then evaluates the sustainability of the type of finance as well. It can also examine the economic value of various components of the firm and the utilization of capital within them. In much more severe circumstances, the firm may be placed into voluntary liquidation to negotiate with bondholders and financiers formally. It might include the administration presenting a document of corporate adjustment to the creditor with such a restructuring program. That would enable certain firms' debts to a creditor to also be excused and the firm to continue functioning, workers to keep their jobs, and the creditor to have a client. The elements of successful corporate restructuring. Organizational change may be complicated, delicate and a challenging process that should be controlled cautiously. It is frequently a sizable corporate commitment that is made while a firm is already in financial difficulty. Leadership. For two purposes, strong leadership is required before ever contemplating a complicated restructuring work. First, a successful expert with a distinct and practical strategy could assist, explain and maintain the corporate structuring on target. It necessitates clarity and determination to guarantee that the corporate structuring begins with and remains focused. Second, a successful leader who has the trust and admiration of his colleagues and superiors may be ensuring that the authorities, such as any lending institutions, service providers, clients and staff, may not lose confidence, mostly during corporate structuring. Synchronization. It is critical to recognize a need for corporate restructuring before it's too late. Sometimes the period between how an issue is initially detected and beyond restoration is relatively short. Unaddressed matters could resume increasing till a company no longer has the resources to control them. Referring corporate structuring will result in the investment of critical vital resources in a losing cause. Scheduling is typically linked to leadership in order of significance. A visionary leader will almost always begin preparing early and well before restructure to avoid more complications. Preparation. It is critical to thoroughly evaluate all aspects of the existing scenario and establish what type of corporate structuring would suit your particular instances. There is no such thing as yet another method. The specific difficulties which can be addressed for effective corporate structuring will differ substantially from customer to customer. Promotion. Although some may believe that promotion is a secondary consideration, it is in fact a necessary piece of the corporate structuring endeavor. Faith in your company, branding, products and management is critical. Essential aspects of corporate structuring and turnaround. Few two organizations are alike. Companies might differ in size, corporate structure, industry source of financing, and employee expertise and capabilities. Furthermore, the fundamental difficulties that cause a firm to go bankrupt are about the same. The following must be considered steps a company can use to get the most out of a turnaround expert or corporate structuring consultant. Act early. The sooner companies deal with difficulties and seek counseling, the greater the results. Seek assistance. If an individual could have repaired the difficulties alone, they would have done it by now. Expert technicians may require money, which could be limited, but it is a commitment in a company rather than an expense. Appreciate and believe the advice of these experts. Curing an addiction is similar. One can offer them knowledge, methods, and programs, and if they're not willing to accept the advice, execute the proposals, and believe their counselor, the treatments will flop. Unfortunately, not all business reorganizations are successful. Before completely closing, a corporation may have to concede defeat and start offering transferring assets to pay off its debts. If you like the video, give us a like to make more videos like this one, and tell us in the comment section below what type of videos you want. Lastly, don't forget to subscribe to the channel for more weekly videos.